Hello, this is Simon Thompson, Vice President and Wealth Advisor at Texas Legacy Wealth Management. Welcome to our monthly market update for October 2014. We're going to walk through the major market events of the month. Securities offered through LPL Financial, member FINRA SIPC, investment advice offered through Texas Legacy Wealth Management, a registered investment advisor and separate entity from LPL Financial. After closing down about 1.5% in the month of September, the S&P 500 experienced much sharper volatility during the month of October, with the market experiencing a pullback which led to an almost 10% drop from the prior month's peak. Despite this sharp drop, the S&P 500 still managed to notch a positive month by rallying to close back above the psychologically important level of 2,000 and finishing up a little more than 2% for the month. We began the month with a variety of weak economic data points out of Europe, including disappointing German manufacturing activity, a lack of quantitative easing from the ECB, and general concern regarding Europe's growth trajectory. This, combined with other concerns, such as the Ebola crisis, turned investor sentiment negative while the market pulled back. We at Texas Legacy Wealth Management remained bullish during the market's mid-month pullback with the view that we were potentially seeing a buy-on-the-dip opportunity. Only time will tell whether or not this was a good buying opportunity, but in the short term, the market has moved higher. Since the pullback, we've seen the market focus on fundamentals as we found ourselves in the heart of the third quarter earnings season. At the end of the month, we'd seen about 72% of the S&P 500 companies report earnings, with 76% of these companies beating earnings expectations and 58% beating revenue expectations. We've seen other bullish drivers as well. Third quarter U.S. GDP came in at 3.5%, slightly better than expected, and Japan's central bank surprised markets with an announcement of strong stimulus measures. We also saw oil prices continue their rapid drop around the globe. While this may well be great news for consumers and boost consumer spending, it may be a sign of limited global demand due to slower growth, which could lead to tougher times ahead for the energy sector if we see these low oil prices persist. The bond market was not immune to the increased volatility as U.S. 10-year Treasury yields dropped yet again throughout the month. After opening the month at 2.52%, we saw yields drop and then bounce back to finish the month lower at 2.35%. As we move toward the end of 2014, we will continue to watch closely the tug-of-war we're seeing between the bond and stock markets, as we see bond yields at historic lows, while the stock market continues to make new all-time highs as the U.S. economy recovers. We find the first 10 months of 2014 mostly in line with our 2014 market outlook. As a reminder, you can view our 2014 market outlook at our YouTube channel. For more information about Texas Legacy Wealth Management, you can contact us via phone, email, or feel free to visit our website. We would also like to remind you to follow us on Twitter and like us on Facebook. Thank you.